if you think that gold prices have done their bit for 2020 by hitting that $2,000 per ounce mark and back home at 55,000 rupees per 10 grams, well, guess what? Chris Woods, in his weekly letter to investors called the Greed and Fear Report, has actually pegged the value at gold and is estimating a target price of $5,500 per ounce. In fact, he believes this is quite a reasonable target. In a more ambitious valuation, though, he also pegs the value of gold at $10,592 per ounce. So even at $5,500, he's expecting a 180% rally from the current levels. So what exactly is the valuation method he's applying that's spurring this kind of ambitious, values of $5,500 and, even more than $10,000? Though officially, of course, the target is being upped from $4,200 to $5,500. So let's talk about how he derived the $5,500 valuation. This he's done so by pegging the value of gold to the US disposable income per capita. He refers to the Jan 1980 secular bull run that was witnessed in the precious metals market, when we did see the rally in gold prices to a peak of $850 per ounce. But back then, if you peg that versus the US disposable income per capita, it was at 9.9%. Currently, with gold being at $1,950 roughly, and the US disposable income per capita being at roughly about $53,000, if we have to go back to that ratio of 9.9%, that sort of means that there is going to be a gold valuation that could touch $5,300, or simply speaking, $5,500 per ounce. So it's all about comparing the gold price versus the US disposable income per capita. The ratio currently is at 3.6%. Back in the 1980 bull run, it was at 9.9%. So to make up for that difference, gold may rally to $5,500 per ounce. But what is that more ambitious target then of $10,000 and above that Chris Woods is actually pegging? Well, that's a different valuation method, which actually involves comparing US official gold reserves with US M2, once again comparing it back to what exactly was this ratio in 1980. So back then as well, if we look at what the US gold reserves were like and what exactly were gold prices like compared to that, the report says that US M2 was only at $1.48 trillion, whereas the official gold reserves stood at 264.6 million ounces. So at a peak price of $850 per ounce, gold reserves were valued at roughly about 15.2% of M2. Currently, the gold reserves are valued at just, at 2.8% of the current US M2. So, for US official gold reserves and M2 ratio to rise to 15.2%, again, gold will have to rally, but with a huge amount of almost $10,500 per ounce, more than that, in fact. Of course, having said that, these are very ambitious targets, and he does say that there could be some near-term hiccups, especially with the yield curve essentially rising. And of course, if the Fed decides to sort of pause on that interest cut trajectory. But for now, it looks pretty unlikely. And yes, despite the fact that, physical demand of gold, especially in India and China, is extremely low, things for gold look pretty bullish for Jefferies.